How's it going out there? It's March 2nd. I'm Frank Curzio, the Wall Street Unplugged podcast, where I break down the headlines and tell you what's really moving these markets. So it's Wednesdays, bringing in the ever handsome, smart, beautiful.
Ooh.
Dang, I'm not talking about you. Dane's like, thanks.
We do have people in town this week. So
I do have other people in town.
There's a few travelers here with us.
I do. But we bring in Daniel Creech to talk about, what's going on with the markets. And, of course, there's a lot these days where we get a lot of questions, right, man? So, listen, let's just dig right in. We had the State of the Union last night, and I wanted to get your thoughts on it. My quick thoughts were, there was hit and misses. I liked, Russia and Ukraine and United. I think that was a strong part. A lot of misses, which I'll talk about. But it's a big topic today, and we'll see. Usually you can find lots of ideas. However, the war took center stage. Usually they talk about different investment areas, where they're going to go invest. And you could really, even leading up to this and even after this, even when it was alternative energy for the last 5-6 years, or how much money is going to certain sectors and defense and stuff, you could really see these stocks move based on the State of the Union, because you're talking about the government, unlimited spending. But we didn't see too much of that in terms of finding ideas for it. But there was significant things they mentioned, oil and things like that. So I don't know what your opinion was.
Yeah, overall, it was decent. I thought he seemed pretty straightforward. I think he got his point across from if you put on the two different hats here from the Republican side, really the only thing you're going to like if you're a Republican or more conservative is the whole Made in America theme. I thought he did a good job of selling that idea on whether it's Build Back Better or whatever he wants to pass. He did make a point to say, hey, from every step of the way, from beginning to end, they're going to do American products and things like that. That's good for GDP. That's good for the economy. I think somebody, I don't know if it was CNN or MSNBC, one of the headlines, one of the news sites I was checking, made a point to basically highlight that was the only time that everybody, or one of the very few times that both sides, you know how they go back and forth. Some people sit there and, protest, say, hey, I don't cheer for that. And then the other side does. That goes back and forth. Overall, I thought it was decent. I didn't watch the whole thing. Typically, I don't watch these under any president. I like to read them. I like to read the transcript better. But I did watch it up until when he gave the congratulations to the retiring Supreme Court Justice. I'm getting old, Frank. I just had a birthday. I needed to go to bed and get ready for today. I was thinking that maybe Bloom Energy, I had that on my list. Bloom Energy, we've talked about, is a greener play. They have a product that works. They have some of the biggest Microsofts, Apples, and things like that as customers that use their power source for cleaner energy. It's down a little bit today after a massive run up over the last week or two. Yeah, so overall, it was more about the worldwide. I didn't like the sense of the whole one world concept. I'm an individualist and a capitalist, and you can rising tide lifts all boats worldwide, but the whole unity of one world and all that makes me a little nervous. So that was my big takeaway. Much ado about nothing in the sense.
Yeah, I have to be honest. I think he was more energetic than I've ever seen him, which is cool, because usually I'm used to him just being up there and making mistakes. He did make one mistake. It was if they're highlighting when he's supposed to say Ukrainians and he said Iranians or whatever, which is kind of funny, but. Again, it's a long speech, and I get it. For me, I like the part, with Russia. I think unity and stuff, and everyone's on the same side. I do think that our media is portraying that, the Ukraine is doing fine. I don't think they're doing fine at all. I think they're in a lot of trouble. I think that capital is going to be taken over very soon. If you're looking at pictures, listen, it's patriotic. They're fighting. I think the war is basically going to end when, it's either that city's going to be defended or Kyiv's going to be defended or taken over. And I think it will be taken over very shortly in a couple of days. I just think there's nothing that Ukraine could do about it. But outside of that, you know what? There's a couple things that really piss me off. First of all, we all make mistakes, and I think humble is such a great quality. Not to the point where it presents weakness, but we're under this impression that you can never admit that you're wrong with things, right? So he's talking about how we're going to lower the deficit by $1 trillion. I'm like, okay, well, you spent 18 trillion fiscal, right, through COVID. You did. You. This is under your leadership, right? So this is in fiscal and monetary, through the Fed, and then. We're sitting there and he's saying how great the economy is right now with the stock market crashing, right? So we have the inflation near all-time highs. If you take the methods that they use in the 80s, we're at all-time highs. And it's not slowing up. We haven't seen any slow up, right? And energy prices are through the roof. Record crime rates across major cities. The biggest wealth gap in history. I mean, these are all facts, right? Record amount of illegal immigrants entering the country. I think China and Russia are kind of laughing at us. I think we've shown weakness through a lot of this stuff. But, you have your positives and negatives with each president. But, just highlight, hey, you know what? This is what we need to do better. Because right now we're sitting in a market and just, more inflation than we've ever seen. And he's trying to tell us the economy is great, and I'm watching that party get up and clap every time he says that. I'm like, wow, you're really losing touch. People, like, if you look at Tyson, when Tyson bit off Van Holyfield's ear, right? I mean, even the Tyson's fans are like, oh, my God, this is a disgrace. I can't believe this. If you look at Tyson now, it's hard not to love that guy. Talking about all the mistakes he made, how to better yourself, what's important to him. I mean, you see there's a lot to be said of that, right? From learning from your mistakes. But if you're going to sit up there, and Trump did this a lot too, where you just go up there and tell everyone how great I am and how everything's great. It's not great. And it's really, really not good right now. It's not good for most Americans. So, for that speech, another thing I hate is the rebuttal. I mean, State of Union, bring everybody together. Not only that, AOC with the rebuttal. I mean, you see that? She's talking about,
I did not, but one thing that caught my attention was there was two. You always have the rebuttal from the other side. So in this case, you have a Republican, since it's Democratic in office. And did I read there was two rebuttals, so three total, one from the Republican and then two from Democrats?
I saw AOC come out and really have like a thing about, talking how we need to focus more on renewables, right? I mean, again, she's 30-something. I'm not saying that you can't be brilliant.
Hey, watch it.
I'm not saying you can't say brilliant at that age, but, the experience and the policy and what's going on right now where, yes, we all want to clean the planet, but we're talking about national security. We have the opportunity to be stronger than any. We could turn on the faucet. I mean, not even just be energy independent, which we were, and now we're kind of weaning off of that for renewables that are not there yet. We could still work on renewables, but we could turn on that faucet and start exporting energy to Europe. I mean, and then you're looking at Russia. I mean, Russia's just crazy right now, the whole situation, to be honest with you. Even with the State of Union and Russia going on, it's like, I mean, this would never happen, and I know it's a nuclear power and superpower, but there's no one in Russia right now. All their troops are in another country. I mean, you could probably take over Moscow in like 30 minutes, and imagine the country that really wanted to do that, or China, which they won't, but you're controlling, 30-40% of the world's energy by doing that. It's just, they're really going all in on Ukraine. Anyway, I mean, that's another story, and that's crazy thinking. But for me, when I'm looking at the State of the Union, it's a time to unite, even though it doesn't. But I just hate the rebuttal no matter who's president. It's like you have this whole thing and you're getting everyone excited and this is what we're going to do. And then you have someone saying that everything that guy say, he's totally full of shit, like right after that, right?
So who did the rebuttal on the right? Are you talking about AOC's or the other person?
I think it was a senator from Iowa.
Oh, okay.
I forgot her name. But it was a senator from I'm pretty sure it was Kim Reynolds. So Iowa governor. So, for me, look, I just be real with the people. I mean, now all of a sudden you're saying that you want to fund the police. I love the fact that there's no masks now, right? Convenient, right? Because everyone's really sick of them. Make sure you do it the day before. No science behind it, but the day before State of Union, no masks. You don't need them anymore, which is great, right? So good perception there. I thought it was
very, sorry to interrupt, but it is powerful to make that line about remember, you're going into the midterms, so you want to start saying things and implementing things now so that you see some results by the time you have.
Exactly.
So I thought it was very smart of him politically to say that about funding the police and things like that.
Yeah. Now
and that's good for overall economies as well. So you couple that with hopefully the safety nets that you get back to, plus the reopening and no mask. That's a very positive, and that will play out over the next couple months. Sorry.
Yeah. I mean, overall, it kind of a non-event for me where, but I do think that leads us to oil, right? Which is, the released oil from the strategic reserve. Oil prices over 100. I thought it was a good time to, maybe take profits. But, wait till you hear my interview tomorrow, guys, with Harris Kupperman. He was betting on oil for a while and saying it was going to go over 100 when it was in the 30s and 40s. And even when he was on our podcast in the 60s, he said it was an amazing opportunity. He's humble. He says when he gets things wrong, this one he got really right. But he's saying that oil is going to go a lot higher. And you'll see that forecast tomorrow, which is insane. But, what we're doing with Russia right now, we're making them 10 times stronger. The sanctions are driving up oil prices, and they're one of the largest producers in the world. They have the entire playbook. the same thing happened when you took over Georgia. Same thing happened when you took over Crimea. The same exact things. You place sanctions on them. They knew NATO was going to come after them. You can't do anything. So they had the playbook. At the last 5-6 years, they weaned themselves off of treasuries, got out of the dollar, lowered their euro stake. Now you're seeing gold go higher and Bitcoin go higher. I mean, Putin was very, very smart in, hey, this is eventually going to happen. This is what we need to do over the next few years. And, the timing was great, but I just feel like they're so ahead of us because everything that we're doing and we're hurting them and their economy's closed. Listen, the same thing happened with their currency. It went down 35% the last two times. The last two times when they took over Georgia, took over Crimea. So they know that's going to happen, right? So they close the stock market. It's going to be a great opportunity. It's going to be a chance for all that money that you have in oil to really invest in those companies. These guys are really smart the way they're doing this. We have to find a way to really hurt them by taking away that power in oil, which we haven't done. Otherwise, these sanctions, I won't say that they're meaningless, but what are they doing? They're causing massive price increases for every single person in the world. And the one person you're not hurting is the person you're supposed to be hurting is Russia because they're one of the biggest producers and oil's going through the roof and they're sovereign wealth. It's just, for me, I don't get that part in terms of strategy. And I just feel like, Putin, there's a narrative now saying he's crazy, he's outrageous. He has no choice. He has to take over Ukraine right now. If it doesn't, it's going to seem the most weakness the Russia's ever been in history, even if they're not able to do that. So he's all in. He's definitely going to do that right now. I mean, he has to do that. He's not crazy. He's very smart up to this point. We have to do something. It's either, we're doing everything we can to try to prevent this thing, except for basically putting troops on the ground. But, we have to do something. I don't know what that is. It's not SWIFT payment systems. It's not that. It's just the sanctions right now are not working. They're actually making Russia very strong.
Well, nothing's going to happen overnight in a situation like this. The sanctions and the SWIFT payments and the lack of communication, or cutting them off from communication, I should say, will definitely have a profound effect. What good is it, Frank, if, and we're paraphrasing a little bit here, but to your point, they are very rich in commodities. They're a very big producer in oil, one of the largest, one of the most influential. Yet, if oil goes to $150 a barrel, but yet nobody is a buyer of your oil, what good does that do to you and your economy? We're going to wait to see. Obviously, our administration's bet and the world powers are saying, hey, that's going to squeeze you out. It's going to cause strife and, for lack of a better word, just nervousness and non-commitment on the inside. You've already seen reports about logistic issues, food and logistic issues on the invasion and all that kind of stuff. Are they doing enough right now? I think the low-hanging fruit there is to say no. And it's funny because you always say, hey, let's look at the other side. So right now, the contrarian bet would be to bet against oil and or take profits. I'm still of the camp of, this is the fun thing about investing from a bigger picture. When you're right on an investment or a thesis, the hardest thing, and this isn't Daniel Creech saying this is much smarter people in books and all kinds of things, but the hardest thing, Frank, to do is to do nothing. Because you always want to do something. You want to capture. So, hey, if you were in oil for the last 6 months and you've been in any kind of energy company that's gone up, I'm not going to, and I don't think you're going to do the same. Nobody's going to begrudge you or get on you for taking some profits or taking some off the table. However, just because times are good and you can sell into strength doesn't mean it's time to get out of this and move into something else entirely. Forget Russia and the invasion for a moment, as negative and as easy as that sounds to say. There's still a lot of issues with supply and demand and bottlenecking and headwinds against oil and other sources of energy like that are going to continue to drive the price higher. You just have a huge short-term, i.e., if you will, boost with the Russian invasion. So all this is saying, we say all this to say, make sure you have exposure to energy companies. ExxonMobil was out today. Continental Resources was out today making announcements, Frank. This is a good segue because you love when companies make announcements like Ford.
Yeah.
But ExxonMobil and Continental Resources are investing in carbon capture. They're getting out in front in this. They're going to be the leader in the cleaner energy. And that is the type of banner you want to have. And that's why we have ExxonMobil and Dollar Stock Club.
No, definitely makes sense. And as I'm watching, because Powell's testifying right now, the market's starting to take off midday here.
Higher or lower?
No, higher, because, he's saying all the right things. So he's saying all the right things, like, they just have some headlines on there and saying that inflation is a function of the monetary action and we can handle it. Okay. And the economy is very, very strong, so Powell will propose and support a 25 basis point rate hike in March. That's what he actually said. That's a headline. Wow. Announcing it before the meeting. That's going to be 25 basis points rate hike in March. We'll propose and support. So, man, now you're telling her, wow, and the markets are liking that right now. So the market's going up. I think we're up like 300-400 points now in the Dow, and the NASDAQ turned, and even Bitcoin's starting to surge again, which up to 45,000. But the Fed to me is the biggest wild card here. I mean, you want to talk about a wild card? We're talking about 5 weeks ago. There was 100% chance, based on the Fed funds futures of what they're going to do, that they were going to raise by 50 basis points. Before today, before this headline, all of a sudden out of nowhere, there was a 10% chance the Fed was going to do nothing. Nothing. I'm not talking about 25 basis points. Nothing. So if you think about that in 5 weeks, 4 to 5 weeks, the massive amount of uncertainty for the Fed to make that, or for the perception to change that much. I mean, we're talking about 3 rate hikes 3 months ago, then 2 months ago. Then we're talking about 9 rate hikes from JP Morgan. Now it's 3 weeks ago. That's uncertainty. Nobody knows what the Fed's going to do, and the Fed doesn't even know what they could do. They didn't do anything yet. Keep that in mind. Where inflation's all-time high, they didn't do anything. They said, November, this is what we're going to do. They didn't do anything yet in March. Now you're going to start with a tiny little 25 basis point rate hike with energy prices surging, which energy is the worst thing, in terms of inflation, because that impacts all companies, every single company. And what are they going to do? They're going to raise prices further, and you're seeing that across materials. I'm getting a pool built right now, and it's like 3 times the cost it was from 12 months ago. 3 times the cost to build like just a regular pool, right? So it's insane with the material costs, and they're going higher and higher, and a lot of that's a function of oil prices. But the Fed is so behind the curve, they just don't, I understand we have the rush situation and everything. A lot of stocks are down, but it is pretty crazy. But yeah.
I'm going to have some fun with you because you were thinking they were going to go 50 basis points. So he literally just said that they're going to do the 25.
It says the headline right now is we'll propose and support a 25 basis point rate hike in March.
Gotcha. Okay.
That's the headline, what it says. So, propose, you vote, whatever. But, for me, I think,
Frank, I got to have some fun with you. You got to quit being surprised that these people are going to change their mind. You give them too much credit, my friend.
You know what the problem is they've been doing this all along, and I understand their playbook is everything they ever read in the past. And everything they ever read in the past, especially since the credit crisis, throw freaking money at it. If we throw money at it, we're fine. Look, we made a ton of money by bailing out the banks and taking warrants, so all this stuff came back. This time, you went even crazier. And then when the market came back and we had record highs in almost every asset class, which was a year ago, you still said pedal to the metal. It's why we have supply chain concerns. It's why people don't want to go back to work because they're getting handed money still. And even Biden promoted that, more child tax credits. Again, just handing people money to have them stay home, which is why when you go to your favorite restaurant, it takes an hour now, or they're closed at certain days during the week because they can't get anyone to work there. So we have to stop looking at this from a short-term perspective because that's what we're doing. I mean, look, I understand the uncertainty, but inflation is something that the Fed, you can't really do anything about. You have to take money out of the system. It's the only way to cure it, and they refuse to do that. And as long as you refuse to do that, we're going to see these inflation numbers not even moderate. They're going to continue to go higher. And you're going to see that in the quarters ahead, and companies are going to be raising prices. And again, this prolongs it. Instead of just, taking the punch in the face and, 4, 5, 6 months and maybe even a year stretching out to tough market conditions and getting everything under control and prices coming back down, interest rates at a normal level. Now you're prolonging this for years and years and years because, again, nobody knows what the hell you're going to do. And with the uncertainty, 50 basis point rate hike, 100% 5 weeks ago. And then up to yesterday, it was 10% no rate. You know how big of a difference that is?
Yep.
So anyway.
Hey, there's things going on. You got invasions going around. It's difficult. Cut them some slack.
Yeah.
It's a tough job, Frank.
I'm trying to cut them some slack. But then again, it's just when a market, and we're seeing it.
Hey, lower your expectations on them doing the right thing.
You know what? It's not even expectations of them doing the right thing. It's that this is what they need to do.
I know I sound cynical for everybody out there, but you got to understand, Frank has a very genuine big heart.
I believe people at the end of the day would do the right thing, and we haven't seen that in politicians, at the mask wearing, all the bullshit and the lies that were told. Even though the science, the science was there. The kids don't need this. Now we're seeing that the vaccine. Did you see that highlight from Pfizer, where kids between, I think it was 5 and 11 or 5 and 13 or something like.
Oh, how quickly it wears off.
Yeah, it's just basically not. So basically, you have the same chance of catching COVID or getting COVID or not getting COVID, whether you take the vaccine or not. But yet, you're taking the risk of that vaccine. It's whatever they could do to make money, they make money, and I get it, right? So it's I won't go on a rant there because there's other things I want to talk about, which includes earnings. But before we get to earnings, Buffett's letter, which you were excited about, you're like, yeah, this is cool. I want to talk about. I read some of it, but this is on you. What do you want to talk about? Because you were pretty happy about a few things, right?
I love this. In my opinion, everybody should read these annual letters that Buffett puts out there. Obviously, hands down, he's one of the, if not the greatest investor of his generation, and he's one of the best ever. Period. On just creating a conglomerate, and I encourage everybody, that listens to this, go through read his annual letters. The most recent one just came out this Saturday, and a couple of things that stood out to me from his perspective. First of all, Frank, you got to give him credit, since on the first page they put the compounded annual gains against the S&P 500 since they took over management. Overall gain from 1964 to 2021 for them is a little over 3.5 million%. which hell, the S&P did 30,000% over that time. So nothing to balk about, but nothing quite like them. The main thing that I want to take away quickly is on the Cliff Notes version of Daniel's opinion of this is that he does such a great job, and he has for years, on trying to convince people to think about buying stocks as buying businesses, like the entire business. So you can own a portion of businesses, like one of their biggest holdings is Apple. They don't own Apple entirely, they own a portion of it. But he looks at it and views it as if they were buying their own company. He wants a solid business with great economics and a great CEO. If you look at Buffett's stature in the building blocks, and he goes through this in his letter, he talks about it a lot through his insurance CEO, Geico, and other businesses with the Pilot. But you focus on CEOs. You and I have talked about this a lot. We go through transcripts all the time during earnings season. You want to see what management is saying. Yeah, typically they're cheerleaders. That's part of their job, is to be upbeat and be successful, or sound successful, sound exciting, be a little salesy. But when Warren Buffett is telling you, hey, they invest in people, they buy companies, they let the people continue to run them as if their own, that's something special. And I say all this to get to two great companies here in a minute. But a couple of things, Frank, real quick. Did you know that Berkshire pays roughly $9 million a day in taxes? So Buffett always walks this fine line about taxes. This is one of the many reasons I respect this guy, because he comes across in the media, projects him as the nicest guy in the world, and he's one of the best cutthroats and businessmen in the world. So I respect the thing on how he pulls the strings and puppet master on that. He talks about the insurance and how the float, generates their massive earnings, because all the money, or a huge majority, billions and billions that they earn, or not earn, but collect and then invest for shareholders, is basically for free because of the insurance quotes. You ought to read through that. He does a great job talking about that. Share repurchases, Frank. This is what I want to talk to you about. And this is what I wanted to highlight, because for the last several podcasts, I've been talking about the low-hanging fruit for the environment we're currently in and going into, i.e. higher inflation. I don't know how you have more of a risk-reward standpoint, Frank. Argue if you will. How is Berkshire Hathaway not one of the best companies set up to just start putting money to allocating during what we're expected with inflation and stuff, across insurance, across railways, all that kind of stuff? Where do you stand on that as a low-hanging fruit that nobody cares about, because it's like recommending Amazon and Apple? People are going to say, I don't want to listen to for this. Everybody can think of that.
I think it's a good idea. I mean, if you're looking at the holdings, the one thing that does worry me, they got a very, very big position in Apple now. And Apple, I don't know if Apple is so much of an inflation hedge. That's, it should be cyclical. It's one of the few technology companies that comes out with new products and able to significantly raise their prices and maintain those margins forever. Yes, they're getting into services and things like that, and which is becoming more of a percentage of the portfolio, but it's still relatively a hardware company. You have banks, which are good, even though they're trading 52-week lows, and we have massive inflation, which is a surprise, but everything's getting nailed right now. Coca-Cola is another good name. I mean, you have dividends, and not only that, you're seeing, with Buffett here, and I got some numbers here. Yeah, they bought back $6.9 billion of its stock in the fourth quarter alone, bringing that year-to-date total to $27 billion, and they're going to continue to do that. Some of the things that I saw, and hopefully that answered your question, but some of the things I saw there is, he highlighted how, of course, rising interest rates is going to dramatically impact markets, which I think some of us know, not all of us know. And we're seeing that to the effect just in November from the Fed saying that we're going to raise rates more aggressively and tighten. And what's happened to the market? We've seen, we're looking at Starbucks and Nike and Home Depot down 25% plus from their highs. And it's impacting all stocks, not just the bad ones. he said something else that was very surprising. So he has, in terms of buybacks, also within Apple, I thought this was really cool because he said his ownership is a mere 5.55%, up from 5.39% a year earlier, which seems like nothing. He goes, sounds like small potatoes, that increase. But consider that each 0.1% of Apple's 2021 earnings amounted to $100 million. We spent no Berkshire funds to gain our accretion. Apple's repurchases did the job. But he also highlighted how he's not really, even now, he's not really finding a lot of ideas.
Exactly, yeah, which leads to the $140-some billion in cash.
Yeah, so you're going to see more buybacks. Yes, it is a good place. And, your expectations were, hey, you know what, remember we had 8% annually. Those are usually returns for S&P 500 dating back to 1950s. The last 3 years, though, we've seen massive gains of 30%, like 19%, and I think it was 26% 3 years in a row. It's, again, you got to revert back. You can't continue with those gains. And this is a company that's well positioned. And again, everybody just laughs at this guy for so many years and years and years, right? And you see all these new investors say, this guy's not Kathy Woods and stuff like that. Not that she doesn't respect Buffett, but it's just funny to see how, he finally got into technology. I don't know if Apple was his idea or the portfolio manager's idea, but that made the whole portfolio, that made the gains, and these guys are doing great. Now, really quick, because of the buybacks. And we're going to get the stocks. We might run a little bit long in this podcast, but the buybacks, Daniel, I want to talk to you about because that's they're saying it's a massive catalyst, but let's go over because the last 2 quarters alone, okay, last quarter we had a record. I think it was $260 billion, $500 billion was spent to buy back stock in the last 2 quarters. Think about that. That's how strong the company's balance sheets are even today. Right? So 30% of that was from the Googles, Apples, and Microsofts, right, which led the way, but you're looking at Meta purchased $20 billion worth of stock when shares were above 300. And where is it? Around 200, a little bit above that. Maybe Starbucks, Cisco, Charter, they're buying back massive amounts of stock last quarter. Stocks that have gotten hit. You're going to see another record year. If you're looking at the full year, $870 billion was spent in 2021 to buy back stock. And $500 billion in the last 2 quarters. And if I had to guess, over those last 2 quarters where we are now, those stocks are down. Most of them are down significantly since then. So you're going to see more buybacks come in, and which they should come in at the right time because these stocks are down tremendously, and you're seeing companies raise dividends. That's something to look at because that's a catalyst that people aren't talking about, where I think it's more than 80% of the companies are now outside that window where they can now talk about it and announce buybacks. And that's why you've seen a lot of companies, announce these buybacks now. So, you're going to see that. I think that's a big catalyst in this market where some of these names are good names that are down tremendously. And, we'll take that to earnings because I know you want to talk about Ross and also Nordstrom. Nordstrom's up to 30+%. Ross had really good numbers. And I know you want to talk about some of the earnings, but, now's a good time. Maybe, maybe these companies buying back stock now, but Nordstrom up 30% today, but it's still down 30% plus from its highs.
And Nordstrom had a huge short interest. I believe it was over 20% going into that
taken over. I think I covered that a while ago. I haven't looked at it in a few months, and then I don't know, they made sure that wasn't going to happen or whatever it was. But
I like your stats on the buyback. I didn't realize they were that high. And one last point here: Buffett has done a great job over the years about pounding the table, for lack of a better term, on buybacks can be used to help earnings per share because, you're just shrinking the number of shares. Therefore, all else being equal, your earnings are going to go higher per share because you have less numbers. And Buffett is always talking about and reiterating the fact that you want to buy them back at attractive prices. If you buy, for your example, if you're buying your stock back at 300 and now it's 200, obviously in the short term, you can say, oh, well, we overpaid. You have to give that time to play out. But over time, you want managers that are good allocators of capital. And so my point here is Buffett, they've repurchased 9% of the shares outstanding since 2019. Buffett has. And they bought back year to date $1.2 billion as of February 23rd. And he says our appetite remains large, but will always remain price dependent. My point is that for us average investors, if you have the greatest investor buying back his stock right now, that's an easy path to follow. On your share repurchasing thing, a lot of them coming out of blackout periods. I think it's brilliant. And to your point, Ross stores, you want to see them buy them back at the right price. So if you have Ross, ROST pulled up, you see a chart there. It has sold off significantly from its recent 52-week highs. I point all out because they just came out with good earnings, solid earnings. Guidance was a little rough, but what did they do? They announced a $1.9 billion buyback. They announced a 9% increase to their dividend. management said that they're getting back to normal on store reopenings going forward. And after 2023, they expect to return to double-digit earnings per share growth. Now, all things else being equal, FactSet, as of the 25th of February, on their wonderful earnings insight that you always call out, basically for cyclical year 2022, earnings per share are expected to grow around 8.5%. Mm-hmm. Ross is telling you that they're buying back shares that they've sold off since recent highs. They're getting back to normal on store reopenings. They're raising their dividend, and they expect double-digit, higher than market average earnings per share growth going forward. When you have people spelling it out like that, put that on your radar and make sure you pay attention to that, because that's exactly what you want to hear going forward as an investor in a wonderfully run business.
Yeah, if you're looking at, and we have the chart up here now, we're looking at a stock that went from 134 to 80 to 86, right? And now it's at 96. So people are like, wow, the company just reported great earnings. It's up 7%.
And it is up 7 or 8% today, yes.
Big deal. I mean, the stock has gotten murdered, and you're seeing those numbers are good. They have a dividend. They're buying back, right? I think they're buying back stock. If not, I mean, they raise a dividend, buy back stock.
Yeah.
They announced, massive growth plans, opening up more stores. This is something that does very, very well if you've been in these stores during, times. If you're thinking that times are going to get tougher, this is a place that people shop. This checks off all the marks of a business. And this is when I say I'm seeing ideas that I've never seen before, like just incredible ideas in a very, very long time. This is what I mean. The market's terrible right now, but a company like this that's getting it done, just reporting great numbers and only less than 10, about 10% off its highs. With that quarter, you're seeing that, right? So when things do get better and we have some kind of certainty, this thing's going to shoot up to its highs again, right? So these are the stocks that you want to invest in. As long as you have a 12-month time frame, you're scaling in. This is a good name. I wanted to bring up something else because Ambarella reported, and Ambarella got nailed. They got destroyed. It was down like 35%. And it's not so much they bombed the quarter, but they said something that was interesting because they had supply constraint concerns, which, by the way, I get this data, guys, every single week, especially with cars. And it took a huge leg backwards where we were hearing from Ford and GM, and I told you that they were lying 9 months ago, 12 months ago, that supply chain issues are easing and, second half 2021 we're going to be good. No. Now we're hearing Intel saying, nope. These are the guys that build the chips, Intel. They're like, nope, this is through 2023, guys. Sorry. Now, Ambarella, a little part of Ambarella, when you hear supply chain concerns and constraints, specifically, I found this in their conference call, that it's 14 nanometer supply from Samsung will be constrained. That's what's constrained right now from Samsung. Okay, the 14 nanometer just for Ambarella, right, which is a much bigger company. Remember, they used to be like a GoPro play, and that was it. And then they grew, and this company's massive now. So that 14 nanometer supply goes into advanced driver assistance systems, ADAS, driver and in-cabin monitoring, autonomous driving, robotics applications. Think about that for a minute, because Ambarella's not going to be the only company that's impacted right now. So basically, those chips that need to go into a car are constrained right now from Samsung. And you're probably going to see the same thing from Taiwan Semi, where capacity is taken. What does that mean? When I'm looking at a company like Ford, and Ford came out and said, hey, you know what? We're going to separate these divisions, right? It's going to be electric vehicles and international combustion business. Ford Blue, right? That's going to be the iconic, gas company, and Ford Model, right? Ford Model E is going to be the breakthrough EV vehicles at scale. And I love Ford because Ford's management team has done a great job over the past probably 18 months of saying the right thing and bullshitting. And it's different from the way they used to be, which is why they were just left behind. But now, I mean, this company is going to say anything to get its stock price up. Eventually, you got to put the numbers behind it. We saw last quarter that the numbers aren't behind it. And a lot of this, I just want to throw this at you because this is cool. They said they were going to do this. This is going to create value. But I'm just going to show how a lot of this, you're saying things to get your stock up because it's not good right now. For Ford, GM, these guys, they're not making cars. They can't make cars. They don't have the chips. And the supply chains are getting worse and worse and worse. Now, they say they're going to accelerate their Ford plan to unlock growth, create for Ford shareholders. Total company adjusted EBIT margin of 10%. They're expecting an annual production of more than 2 million EVs by 2026. So the margin of 10%. 2 million EVs by 2026. And EVs represent half of global volume that they're expecting by 2030. Let's put those numbers in perspective, just outline. You're not even producing a total of 2 million cars right now. You didn't do it in 2021. You didn't do it in 2020. Saying this is going to be half of your global volume by 2030, that means you're expecting to produce 4 million cars in total. 4 million cars. The highest amount they have ever produced was 2.6 million, barely 2.6 million in 2016. That's the most they've ever produced in their life. By the way, Ford is shutting down at least one plant, probably two plants, because the supply can't still. They're not telling you that, right? They're announcing this shit to basically mask it. It's kind of like what Disney did with streaming and all these subscribers. No one's paying for it, but it's okay. We have too many subscribers that aren't paying for it. You know, the numbers matter, and you're seeing that with Disney, right? You want to get into the right industries and pretend you're a growth company. How is Ford a growth company? Because if you're looking at their earnings over the next 4 years, this year expected to hit about $2, $2.07. And if you're looking through 2026, that number is only expected to go as high as $2.87. Right? So when I see that, you're looking at 7% annual growth in earnings over the next 4 to 5 years. That doesn't sound like a growth company to me, right? That's annual growth in earnings. That's what analysts are expecting right now. Their debt's going to grow from less than $20 billion to $33 billion by 2024 because they don't even really have the technology for this. How are they going to produce this? So massive spending, below average growth. And now you're about to, you say we're going to be one of the largest EV makers. Every car maker is going to be releasing new EVs. Easily over 150 in the next 3 years. 50 were planned this year. Probably you're not going to see any on the street. Maybe you see 5, 6 people that get them. But it's just classic how, you're listening to a company doing everything they can because the numbers aren't there. They have supply constraints. They're going to see it. You're seeing it from the suppliers. They're not announcing it. GM's not announcing it. Wait till you see the numbers the next couple of quarters. These guys aren't selling anything, and the reason why the numbers aren't as bad is because, yes, there's demand there and people need to buy cars and they're able to, the existing cars are able to sell a lot more for a big premium. But if you're looking at sales being down, you look at a company even at its best levels through 2026, which you're going to see a lot of, whatever, the new BRK.A, whatever, their new Ford F-50 Lightning, you're going to see come out. Even with all those numbers coming out, there's no way they can make these estimates on production. And, to me, it's just funny. Look, if you say the right things, you say the right things. That's what Ford is doing. There's no way they're actually going to meet these estimates, not even come close. And you're going to see the next couple of quarters when numbers really, really come down because expectations are high right now. I know the stock was 25. It's like 17. It's up a little bit more on today's news. I think it's going to be short-lived, and eventually going to have to put the numbers. I just can't see Ford putting up the numbers. I hope they do. They're not going to be able to put up the numbers. They haven't yet, and you're not seeing these cars being developed. What is that? That new, I might be even saying it wrong, but the monkey got the EV of the year for 2022, but you can't even buy it in 2022. So what the hell's the use of being the car of the year when you make 2 of them? So
are you saying to short it or just avoid it?
I would short Ford here.
Short it?
Buy puts, don't short it. You never know what could happen in this market. Something could be like, you look at Nordstrom, right? You're right. It's down 60% and boom, it pops 35% in a day. Depending on the expectations, how much is down. Ford's not really down that much. It's still a little bit of expensive stock, but man, I don't know how they're going to get those numbers around. So, and sorry it took so long on that though. But anyway.
That's all right. It's good stuff.
It's good stuff. So we covered earnings. We covered State of Union. Again, we used to try to keep this 30 minutes, but we're closing on 40 minutes. But there is a lot going on. We want to be here for you. The oil markets, the Buffett letter, different ideas that we're bringing you, saying, hey, you know what, Ross, Nordstrom, be careful, Ambarella, and also, Ford, be careful. So we just want to shoot ideas out there, what we're seeing for the week. And, this segment is getting lots of downloads. So, questions or comments, keep them coming in. But Dan, thanks for coming on.
Absolutely.
Awesome stuff. And
cheers, everybody.
Yeah, and I'll see you next week, buddy. All right. All right, guys. So, that's it for us. Questions, comments, again, feel free to email me, frankcurzioresearch.com. Daniel as well. Daniel, real quick before you go, what's your email?
Daniel at CurzioResearch.com.
He loves it. I ask him to say it all the time. But I gotta do it forever now. It's a New York thing. When we find out something that bothers you, we do it for the rest of your life. That's just a New York. That means we really like you, though, by the way. Just to let you know. That's a New York thing. Everyone from New York's like, yep. It's called busting, you know what. Anyway, but really appreciate all the support. And guys, great interview for you tomorrow. Listen up. Some ideas are going to share. Lots of things that are working. Company has a massive following now, and it's a really, really good interview. It's going to be really cool stuff, so definitely tune in tomorrow, and I'll see you then. Take care.